Coming up today, Bitcoin approaches all-time highs, along with the Nasdaq. What's driving the rally higher? The latest earnings results, Ken Griffin's expectations, the latest economic prints, and the moves from Roaring Kitty. It's going to be a good one, guys. Let's go. And welcome back, everybody, to the daily market review. We got Bitcoin now within a stone's throw of all-time highs, made back on the 14th of March. 73,800 got up to 73,600 as we get in a bit of an anti-fiat rally today. And stick with me because we'll dive into this in a minute, along with some other interesting charts out there I want to show you today. First, let me just get you updated on the latest earnings results coming in after market close as I speak. Alphabet Google coming in with a pretty good beat, up 5% in after-hours trading here, as they beat on both the top and bottom lines, well ahead of Wall Street estimates. 212 EPS versus $1.84, way up on the same quarter last year, $1.55, proving the critics wrong once again. Been plenty of worries from some analysts around this stock. However, their dominant positions in video and search aren't looking to be going anywhere anytime soon, making heavy investments into AI. We also heard recently from them plans to purchase power from small modular reactors. There's more and more big mega cap tech get into nuclear energy. And there's a look at SMR today, just taking a breath here. Still trading on big volume though. We also just got results in from Chipotle, even though they beat on numbers, market's marking them down after hours. AMD as well, taking it on the nose, down 7.4% after hours on their earnings result. They did come in with a miss and forecast that failed to impress the market. Did say its data center business doubled in sales, quarter in a row, but overall revenue was in line with expectations. Nothing too impressive for the market here today. Doing a bit better, Visa, up 2.2% after hours, and really taking it on the nose today, Crocs, down almost 20% after they reported earnings. Same with JetBlue Airways, down 17%. Doing a bit better, VF Corporation. This is the company that owns Vans, Timberland, North Face, clothing brands, bouncing up pretty good here these last two quarters. We also just heard from a stock that's been in the headlines a lot this last week, McDonald's, after their E. coli outbreak, in which they said it won't have a material impact. So they're going to resume selling the quarter pounder this week after the Colorado Department of Agriculture concluded the beef patties weren't the source of E. coli. They did come in with a slight beat on EPS, same with revenue. Not too much though, and overall pretty muted reaction from the market. Basically flat, just down a little bit here. Doing really well after hours, meme traders' favorite, Reddit, up over 21% on an absolute blowout quarter, getting cash flow positive for the first time ever. Positive EPS, 16 cents per share. Market's loving that, up over 21%, just under $100 a share, all-time high for the stock. And so just getting back to the market, we're still in this same pattern, coiling up, going sideways, really low volatility, not the biggest volumes at the market level either. However, what has been shaping up this last few days, the Mag 7, mega cap tech, pretty much sitting at all-time highs here, along with the Nasdaq triple Qs themselves, approaching all-time highs, starting to look pretty good, both technically and seasonally. Just looking at my seasonality forecast indicator for the next 1-2 weeks and 1-2-3 months. Green across the board, pretty healthy numbers at the index level. That's because we're coming into the most bullish period of the year. The last 2 months going into January, especially when we've already got price and earnings momentum. Strong tailwinds for the market here. Pulling back a little bit today, but still holding above its 50-day, the Russell 2000. It too, good bullish seasonality just around the corner, and the market's running out of days to do a rug pull before the election. Like option dealers are still pricing in the possibility, asking 10 points above realized to underwrite volatility here. I'm starting to wonder if the market's going to do a pattern similar to Tesla last week, where it just coils up for the event, then maybe we get an explosive move after the event, in which I'd say would be pretty much binary. Big red candle if Harris wins, big green candle if Trump wins. And the way the market's trading, it's like it's already made up its mind. DJT again today, up 8.7% on blowout volume, 166 million shares traded. Now given it a market cap of 10.3 billion, and interesting to see his arch nemesis in media, the New York Times, cap 9.2 billion. DJT is bigger than the 200-year-old New York Times. Coming up tomorrow, we've got earnings from Meta Platform, also trading really well of late, popping up 2.6% today going into it. Plenty of bullish seasonality. I'm expecting a good result from them as well. We'll also get to hear from Microsoft, edging up a little higher here. And other market leaders like Eli Lilly, it too coiling up going into earnings tomorrow. We'll also get GDP data from the States. But like I said, what's really stolen the show today, Bitcoin. And if you've been watching this Click Capital channel, you'll know I've been really bullish on Bitcoin ever since mid-September. And that was for a few reasons. If I just drag my seasonality forecast indicator back to that time when I started talking about it, you'll see it was really bullish on all timeframes going forward. But also more importantly, the Fed had just cut 50 basis points here on the 18th. Global M2 money supply turning sharply higher, and the prospect of huge fiscal stimulus from China All of that very bullish for Bitcoin, along with the increasing odds we're going to get a change in government that's more pro-crypto. All of that added up to multiple tailwinds. And just as I'd been expecting, we're going to come up and test these all-time highs. And I wasn't expecting a breakout to all-time highs unless we did get that Trump win. But like I said, the market's already trading like it's made up its mind, which is going to be a big shock if that doesn't unfold the way that's already been priced in. And we're seeing the volumes coming back in to the most popular Bitcoin ETF, IBIT from iShares. Tracking up there today, pretty decent volume, 81 million units traded. It too looking pretty good on the chart here. Lagging behind, but showing some signs of life, Ethereum, which has been in a bit of a downtrend of late, but the iShares Ethereum Trust as well, looking like potential signs of accumulation here once again today, after that massive buy the dip on the 5th of August. Also catching another bid today, Dogecoin, Elon Musk's favorite. Widely speculated he may integrate this as a form of payment on X, along with his visions of turning X into a super app where you can do everything on it. Dogecoin could be up there as one of the most popular digital currencies and payments of the future, even though it was born out of a meme. And just looking at the crypto total market cap index, currently at 2.38 trillion, and just going out to a weekly chart on this. Been in this bit of a downward channel here that we're breaking out of. Maybe a bit of a rounded bottom. This is kind of a bullish technical pattern here, but we'd really need to take out those all-time highs, in which it pretty much hit 3 trillion right on the nose. We get that higher high, we get confirmation. On crypto market, Brett is in a bull market. But like I said, it's an anti-fiat rally today because we've got gold once again ripping up to a brand new all-time high, just sitting under 2,800 US dollars per ounce. Same with silver as well, catching a bid, trading remarkably strong of late, even though the US dollar has been marching higher, along with bond yields. In my opinion, on expectations, the US economy may just hold up better than thought, and it wasn't just about to fall off a cliff in the jobs market. That was a wide consensus about a month and a half ago. And there's just been a major change in markets over the last couple of years, becoming more pronounced this year, even this month. And that's the use of gold as a flight of safety, which it has always been to some degree, but now a lot more so than long-dated treasuries. And in fact, just going out to a long-term monthly chart of gold versus treasuries, look at the bull market in this spread, absolutely motoring higher, just really orderly, simple and shallow pullbacks before just marching higher and higher. Gold significantly outperforming treasuries ever since COVID. Huge explosion in liquidity since then. And interesting, just staying on the monthly chart, going over to a spread of gold versus S&P 500, gold versus stocks. Still at the same ratio we were even before the global financial crisis, all the way back in 2006. However, maybe some signs this could have bottomed out here. And just switching over to the spread chart between gold and the real estate ETF, IYR. Funny enough, it too's trading at the same level from back in the heat of the global financial crisis, but shaping up pretty nicely here on the chart. Ascending triangle, been in an uptrend for a couple of years now. Gold is outperforming other asset classes, may do so on US large cap growth stocks too if we've seen a bottom in that spread. Just staying on the monthly chart, looking at the gold miners index, GDX, coming up to multi-year highs now, still well off those highs from the last bull market peak in gold back in 2011. Even lower gold junior miners, still a ways off 2011 highs. However, we are getting some constructive signs on the chart as well. Looking at junior miners versus senior miners, may have based out close to breaking out here. That's a good sign for the miners when you see the juniors outperform the high beta stuff. And when you see miners outperform the underlying as well, there's another good sign. There's a spread between gold miners and underlying gold. Been weak for a few years. However, we have been pushing up out of this downward trend. It too may have potentially based here. There's a look at the silver miners monthly chart. Having a really nice month, up almost 20%. Really strong volume coming into this. Looks like we're moving off a strong stage 1 accumulation base. And once again, silver miners versus the underlying silver, showing good signs of accumulation and basing here, potentially breaking out. And same with silver miners versus gold miners. So silver is a lot more volatile than gold. Swings around a lot. And you could kind of express that another way, looking at silver junior miners versus gold senior miners. That's shaping up, breaking out, which means the market is seeking more risk. And that's a good tailwind for the miners, which is still, as you've just seen, trading really low relative to the underlyings. And the good news is we've got crude trading at multi-year lows, big cost input for the miners. And just looking at a long-term monthly chart of the spread of crude and gold, getting down to some of the lowest levels it's pretty much ever been at, except for that black swan event back in COVID 2020, when the market was paying you to take oil off its hands. So we had a supply glut. Economic activity fell off a cliff. Supply warehouses were overflowing. That was a true anomaly. However, looking back over decades, the spread of crude versus gold, apart from 2020, it's never been lower. So basically, the lower the spread goes, the more profitable gold miners can be, because the less they have to spend on oil to dig the shiny stuff up out of the ground. And whilst we're on spread charts, also interesting to note my spread here of growth sectors versus defensive sectors break out to all-time highs. There's a look at high beta versus low volatility stocks, also shaping up a bit here, as are discretionary versus staple stocks. And these are signs typically associated with early cycle when you see growth starting to lead once again. But we've got to keep an eye on inflation expectations. They too ticking higher. That's why every setup in the markets are unique. Can't just compare one market in a vacuum with something that's happened 50 years ago. There are key differences. But just getting back to Bitcoin, why are we ripping up so hard today? Is it just momentum feeding onto itself? Is the market really that convinced of a Trump win? It's already pretty much fully pricing it in. So it's going to be a buy the rumor, sell the news event, or are we going to be at $100,000 a coin come Christmas? Well, like I said, it isn't all just seasonality and technical momentum. There are big fundamental drivers. One of the biggest, global money supply breaking out. Here's a long-term chart of major central banks' M2 money supply. If I just go down to a 5-year time frame, you'll see we've just broken out. And this is all money in circulation, cash, deposits, all forms of liquid currency, and gold and Bitcoin being finite in their supply. When they're priced in something that's infinite, the US dollar, along with other global currencies, that's a really strong structural tailwind, especially when all that's just breaking out. And we could be on the cusp of getting a lot more. China currently weighing up a 1.4 trillion fiscal stimulus package. That's the big one, which I think they may actually announce the day after the US election, because they're holding a meeting next week from the 4th to the 8th. That's Monday to Friday. We've got the US election on Tuesday. I think Wednesday they come out, maybe even Tuesday night. If the states are able to declare a winner that night, and they may use this as a way to get ahead of some tariffs. So I think Trump may slap them with some tariffs, put Taiwan in a spot as well, put pressure on them both, and tell them both they'll relieve that pressure if they come together on a deal that doesn't involve the US military, but still secures semiconductor chips for America. That's just my speculation and opinion based on what I'm seeing. However, as always, it's dynamic, fluid event, can change day by day almost. But there's just been a pylon of really key public figures shining a spotlight on the US's ballooning debt and government spending. Elon Musk declaring a financial emergency, in which he's not wrong. He's just one of the few billionaires with balls to stand up and say something. But it's not just Elon. We've heard it from other billionaires. Paul Tudor Jones saying the US is going to be broke on its current path. That's why he thinks either way, we're going to get inflation. He doesn't own any bonds. He's long gold. He's long Bitcoin. Still long stocks, as the right stocks can protect you from inflation as well. Same with billionaire hedge fund manager Stanley Druckenmiller, making a big bet against US bonds. Betting rates will have to stay higher than longer. It's also a bet on inflation, as some of the best in the business continue to sound the warnings. And it's true, it's simply unsustainable. US national debt almost at 36 trillion. That's 271,000 in debt per taxpayer. That's on top of all their own personal and household debt. And even though most people don't directly connect with that, it does have to be paid back somehow, some way. Not to mention the huge amount of unfunded liabilities going forward. When a country reaches this level, it pretty much has three options. It has to significantly cut spending, significantly increase taxes, or a bit of both. And so I think the best option for the states going forward is to cut spending as much as they can, become a much smaller government, keep focusing on opening up the economy, loosening regulation, encouraging innovation, risk-taking, entrepreneurship, because you're going to need growth. You're going to need a lot of tax to get on top of this. Because just looking at this fiscal year, US government spent 6.75 trillion whilst only taking in 4.9 trillion, 2.8 trillion deficit. That's why Elon Musk, who's going to head up the Department of Government Efficiency, overlook government spending, hopefully put it all on a blockchain, and he thinks he may be able to cut 2 trillion in yearly spending, become a much smaller, yet more effective government, just like he did with X, slashing 80% of the staff while monthly usage is at all-time highs and the app's working better than ever. If he can bring that sort of efficiency to the US government, the US country as a whole, along with the West, will be much better off, and the US dollar has a chance to be saved after all. But those are big ifs and buts. We don't even know if he's going to get into the government yet. But I'd say for all those reasons, this is why Bitcoin's been running of late, looking very strong here on the chart. Along with gold, which also benefits from geopolitical tensions, and silver, which is also benefiting from the AI electrification boom, as it's a metal of the future. But getting back to the here and now in the market, as we make our way through the biggest week in Q3 earnings season, once again, the sea of green, beats across the board. Bit of a miss there on American Tower. BP slightly came in less than expected. Otherwise, pretty good beats. With Bank of America saying third quarter earnings calls suggests SP 500 corporate profits are about to boom. Says there's been a jump in mentions of bottom in earnings calls and mentions of weak demand fell to a 2-year low. Going on to say, we believe the election could be a clearing event for companies to unleash capex, which is big if true, since capex has already been exploding this year. We'll also be paying attention to chip stocks, which even though AMD's trading down after hours, semiconductor sector did catch a bid in the regular session. And we've also got some interesting technical signs coming into semis. Just looking at the spread of semis versus software stocks, significantly underperformed. Looking back in history since 2010, when software stocks have beaten chips by more than 15 percentage points, where we're at now, chips have gone on to outperform by 7.6 percentage points over the next 100 days. And there's a spread there between semis and software stocks, has significantly pulled back this last 5 months. And just looking at some semis today, they did trade up pretty well. There's ARM, Supermicro Computer, TXN, Qualcomm, Broadcom, and TSM, which is trading really strong. I think it's just a matter of time before it's in the $1 trillion club. Currently $848 billion, and Nvidia too, just sitting below all-time highs. What could come under pressure over the following days and weeks, retail stocks, especially those that import a lot from China. Best Buy, Five Below, Wayfair. Other companies like this may sell off in anticipation or on the announcement of tariffs, as the former president has proposed 20% duties on imports across the board, with far more drastic 60% tariffs on products from China. America actually has huge leverage over China. Potentially the new president is looking to use that. However, there's a look at XRT. It had been shaping up, just pulling back a bit over the last week. Guess it's not surprising to see it's a little bit nervous, wait and see mode. These tariffs, that is definitely a risk for the retail sector as a whole. Otherwise, I think consumer spending for this Christmas period is going to come in pretty good. Also interesting hearing today from the world's largest market maker, CEO and founder Ken Griffin of Citadel, saying he expects Trump to win. He's actually donated $100 million to pro-Republican political action committees, also known as PACs. And this is my forecast as well. If the states are able to decide a winner on the night, doesn't take them 2 weeks with record amount of mail-in votes, all that sort of stuff, I think Trump will win in a landslide, and I think he may surprise by potentially flipping some traditionally blue states and getting a lot of the swing states. However, if not, like I said, we really have to cross that bridge when we get there. Pretty sure we'll see a big pullback in the market if we get a Harris win, and she'll be leading the states and pretty much the world for the next 4 years. According to some polls, it's still neck and neck. Some say she's out in front. According to financial markets, it's already game over for her. But I guess we'll have to wait and see what actually happens this coming Tuesday. Interesting to hear Amazon founder and owner of the Washington Post, Jeff Bezos, penned an article yesterday, The Hard Truth, Americans Don't Trust the News Media, in which he didn't allow the Washington Post to endorse somebody for president, which we're seeing a lot of other media following suit as well, and a bit of a change of tune that we've been seeing of late. And so this too, like modern day media, is playing a role in this election, and that doesn't sit well with a lot of people. In fact, we're getting reports that apparently over 250,000 Washington Post subscribers have already cancelled, and a bit of a reader backlash against their decision not to make a presidential endorsement, even though Bezos says he's just trying to make the Washington Post more unbiased and fair, like all large-scale media should be, or at least allow voices from both sides. Just moving on to economic data, US consumer confidence surges in October to the highest level in 9 months. Another sign consumers starting to feel a little bit better going into the Christmas season. Gas coming down, inflation's been coming down, jobs market still holding up, but we did hear today that job openings in the US fall to the lowest level in 3.5 years. Pretty negative headline. Market didn't seem to mind all that much. The fact is, when you look at a ratio of job openings per unemployed person, still above 1. There's still enough jobs out there for every unemployed person. And that's something that really flipped after COVID. Got that volatility like we did in a lot of economic data. And the structure of the underlying economy, jobs market still holding up. Goldman Sachs still expecting GDP growth, annualized rate of 3% that we'll get to hear tomorrow. Now we're getting speculation the Fed may actually go on pause at its meeting next week, Thursday, 2 days after the election. May caught him by surprise. All the strong data that's coming of late. Either way, they've been pretty quiet, trying to make up his mind how he's going to play this from here. I'd say after the election, he's going to sound pretty much the same. It's too obvious to make a big difference in language and policy if we get that Trump win. But maybe December, January, he may just pump the brakes on a rate cut, start talking about inflation. That could be a good reason the market have a bit of a correction in Q1 after that honeymoon period of the election, along with the Santa Claus rallies worn off. And just moving on today to the biggest and most successful meme trader there is, the guy that started it all, Keith Gill, also known as Roaring Kitty, apparently dissolves his entire stake in Chewy, who was actually founded by Rowan Cohen, who is now the CEO of GameStop. And there's a look at Chewy, falling 2% after hours as I speak. He did have 9 million shares. Pretty heavy bet on it. I think he may have actually been able to squeeze out a bit of a profit. I think it was back here in July that he flipped, and it's still yet to be seen whether he's holding a significant position in GameStop. That's pretty much just been holding on this $20 a share handle candle for a few months now. Ever since they popped up, they did some secondaries. Ryan Cohen still got big plans. Actually came in with a little earnings beat last month. But where the meme crowd is today is Reddit. Still tracking higher after hours, up almost 23% here on a really good earning. Other social media sites, Snap, managed to hold up after their earnings for a change as well. Still losing money every quarter, probably still paying management billions of dollars as they continue to fleece shareholders, in my opinion. And there's a look at a long-term monthly chart of Snap, still trading below its IPO price 7.5 years ago. And I think they may actually hold the record for the amount of compensation paid to management versus market cap. I think management's been paid a very similar level to the actual market cap of the company. They've done very well for themselves. And just an interesting chart. I thought I'd end today's review for you guys. And apologies in advance to my European friends. Probably not going to like this one. Looking at a scatter plot here of US and European companies. US companies in the red, European in the blue. Founding year down the bottom, 1850 to 2010. And the market cap on the left here, 100 billion up to 3.2 trillion. What you'll notice is, unfortunately, pretty much since the early 1990s, there's no European companies that have been founded and showing up on this chart here. Pretty much all America, especially the big stuff. The biggest companies in the world are American and were created in the last 20, 30, 40, 50 years. Very few European companies can match that. So you got to ask yourself, why is that? What's the differences between the US and European economies? Even though similar size and people, similar cultures, what has allowed America to innovate and flourish so much with their companies and stock market, and Europe has not? In my opinion, over-regulation, over-taxation, lack of access, and just general policies that hold down economic growth. And it's going to take a lot to turn this picture around. But for now, I guess the old saying, America innovates, China replicates, and Europe regulates, will hold true for the foreseeable future. And that's pretty much a wrap for the daily market review today, guys. Thanks very much for tuning in. We'll be watching Bitcoin for the rest of the week, and the stock market in general just holding up remarkably well in what's supposed to be the seasonally weakest period. Ahead of the election, it may just coil up right into the election, or maybe we get that little rug pull down 1.5%, maybe 2%, a day or two before the election. Otherwise, this is just another sign of the market's resilience and strength throughout all this, holding up remarkably well. Whilst we've got global liquidity exploding to the upside, and not even the strong dollar or bond yields can knock over this market yet. Interesting times indeed. Thanks for sticking with Click Capital, and I'll see you again this time tomorrow. Cheers.